Hi there, you're watching Dukascopy TV and I'm Ben Jones bringing you the first edition of forecasts for the week. Today we'll be looking at the euro-sterling pair, and joining us on the line to give his long-term projections is Josh O'Byrne from Citi. So to begin with, Josh, your prediction for this pair in 1 month's time is 0.815. What brings you to this conclusion?
So critical for the near term will be the outcome from this week's ECB policy meeting and also next week's Bank of England inflation report. With last week's renewed dip in Eurozone inflation firmly in the minds of investors and policymakers, Euro could suffer from potential hints from President Draghi that additional easing could materialise before long. While we don't expect a rate cut this week, indications the decision was a close call would likely weigh on the single currency. From the sterling side, though we have the Bank of England policy meeting this week, we see communication much more likely at next week's inflation report. We expect Carney is going to address the recent decline in unemployment in the context of the bank's forward guidance. We think a dovish shift, be it to a lower threshold or a protest to higher interest rates, seems pretty unlikely at this point. And a move to more fuzzy forward guidance across a broader set of indicators would be more likely, and we think this would be supportive for sterling, leaving a potential rate hike later this year on the table.
OK, now 3 months on, you see a further decline in this pair, hitting levels of 0.81. Why is this?
Yes, so we expect the downtrend is going to continue. In Q2, we think the ECB are going to cut rates and take the deposit rate into negative territory as the Eurozone battles with disinflation and weak credit dynamics. This should make the euro an attractive funding currency, prompting further weakness. In the UK, we expect the domestic recovery will continue to gain momentum, with investment beginning to pick up, attracting capital from abroad. The continued recovery in the labour market, working away of pre-existing slack, should keep the Bank of England on side, with the view that the necessary rebalancing of the economy is something to address after achieving Carney's escape velocity.
And finally, in a year from now, you think the euro-sterling pair will be trading at 0.79. Why is this your projection?
So Citi economists see the UK outperforming in 2014, with the highest growth estimate across the street, looking for 3.3% in 2014 and 3.2% in 2015. At the same time, we think the euro area is going to grow at about 1.1% this year and 1.3% the year after. We expect activity in the Eurozone will remain fairly sluggish, given the necessary deleveraging in the periphery and the push for an export-led recovery into slowing growth outside developed markets. Gradually higher rates in the UK should see sterling favoured for its rate advantage and comparatively attractive fundamentals. With more easing from the ECB likely and the prospect of being stuck at the lower bound for many years to come, we see euro-sterling continuing lower over the next 12 months with a target of 79 pence.
Josh, thank you very much for joining us today. That is it for today's forecast. Monica Gibson will be back on Wednesday to bring you another edition, so make sure you click back for that.